Okay, so we have our session now being recorded. Quick housekeeping rules here. The rules remain the same. As of yesterday, we are going to keep everybody on mute. Any questions that you have, please post them on chat. I will be reviewing them and I will try to answer them as we go along. And if it is important for the rest of the crew to hear the question, then I definitely would encourage that you all post those questions on the chat and I will try and answer them as we go. If there are questions outside the topic that may digress us from our from the training, then I'd appreciate if we can take them offline. Happy to answer them either via an email or feel free to create a support ticket with attention to Anand, and I would be happy to answer those and work with you on each of those questions. With that said, even your host is the same for today. It's still me, Anand Panchamya, just so for anybody who is joining in today for the first time. I have been with Acumatica 4 years, based here in Northern Virginia, just outside Washington, D.C. I have been managing our support group and this is probably my 7th or the 8th time teaching this class. And I will try and make sure that I keep you all awake through the entire session. So with that said, let's get on to our agenda for day 2. But before we get on to the agenda, let me just quickly recap the things that we spoke about yesterday. We talked about creating a company called ABC Consulting, ABC Management Group, which has 2 subsidiaries under it, Software Inc., which has 1 location, which is set up as a branch. Computers Inc., another subsidiary, has 2 locations, East and West, which are set up as branches as well. To file combined tax returns for East and West, we have created a consolidation branch associated all those 3 branches to the actual comp ledger. The same thing for the software branch, which is associated with the actual soft ledger. The consolidation branch is only for tax reporting purposes, and it will not allow any transactions directly against that particular branch. Other branches are also associated with their respective ledgers. It is mandatory to associate an actual ledger to every branch. In other words, any company we create, we have to make sure that there is at least an actual ledger, 1 actual ledger that is associated to the branch. There are other types of ledgers as well that we talked about. Reporting ledgers, which is typically used for multi-currency scenarios where you use it to translate period balances from base currency to a foreign currency. Also talked about budget ledgers and statistical ledgers. One of the the key factors of setting up 2 companies as branches, the determining factor was to allow inter-branch transaction between the Software Inc. and the Computers Inc. So instead of having them created as separate companies or entities or tenants in Acumatica, we decided to have them set up as branches because we will be doing transactions for each other in each of their respective branches, which in turn will allow inter-branch transactions. We will be setting up inter-branch between the software branch and the East and the West branch, which are basically related to the Computers Inc. But there will not be any inter-branch transactions within the branches that belong to the Computers company, that is the East and the West branch. Since East and West branches are part of the same ledger, and the company, which is nothing but the consolidated branch, the system allows for no inter-branch transactions between those 2. However, the system forces you to have inter-branch transactions enabled if the transactions occur across different ledgers. As an example, if there was a transaction between software and any of the Computers Inc. branch, the system will require an interbranch transaction to be created, because each of them, each of those branches are pointing to different accounting or different actual ledgers. In other words, the ledgers at any given time, the rule of thumb is that we should always have balanced transactions or journal entries within the same ledger. The system will not allow imbalanced GL to be released or a journal transaction to be released if if they do not balance within the same ledger. Okay, with that said, let's move on to the next part. Let's just quickly see what our agenda is for today. The interbranch transactions is what we want to look at today. You know, what are the company requirements? How do we do the initial setup? Then we want to take a look at creating some sample transactions between the branches for accounts payable on the AR side, and also do a fund transfer on the cash management side. I also want to talk about some of the consolidated reports, how we create ARM reports to generate these consolidated reports between the two companies, just to meet the reporting requirements that were originally discussed at the time of implementation of ABC Management Company. Then we want to go switch to the next section, which is income and expense classification by sub-accounts, and how the system allows you to create these expenses and classify them into their individual specific sub-accounts. We want to talk about some of that and how we can automate that process. So we'll see some of the automation around that. And then I also want to finish off with the budgets for the general ledger. Hopefully we have enough time through the during the session to complete the budget, but that pretty much would sum up our day. Again, one thing that I did miss out for people looking for the CPE credits, there will be 3 questions posted on the first 50 minutes of during the first 50 minutes of the session. So please make sure you answer those questions, because they are prerequisites for your certifications. Before I move on, I do see a question that has been listed out. Let me read that out for everybody. Quick question as a follow-up on yesterday. Is there a reason to use alphanumeric rather than Unicodes? It seems like you would always use Unicode, so you can use the search tools. Yes, absolutely. That's it. That is exactly why you would use Unicode for your search tools. Now, alphanumeric may not be used for, say, specifically for account or sub-account, but alphanumeric or alpha values can be used for other areas of the segment keys, like, you know, customers segment keys, or business account, or vendors, or account groups. So there are a lot of different areas that you can use alphanumeric codes, but for specifically to examples of account and sub-account, where we may be using wildcards for search criteria, and doing some of the things that we will do, that we'll talk about in the budgets and the ARM reports, Unicode would be the right way to go as far as accounts and sub-accounts are concerned. Okay, with that said, let's jump right into it. So on the first, the session that we will be pointing to right now, if you are following me on the PDF files, I am actually going to be talking about lesson 6 is basically the setup of the balancing entries. So we are going to do it a little different. We're actually going to do the transaction, which is part of the part 2, page 35, which already has the setups done, and then I will revert that back to how each one of those transactions, as and when they occur, and what that relevance has to any of those setups that that we are going to get created, that we will be creating. So if you are following me, please look at page 35 on the PDF file, part 2, transactions across companies. So we plan on doing this a little differently this time, and that way I believe you'll have a better understanding of each of the setups and how we do it. Okay, on the interbranch transactions, let me pull up the PowerPoint here. I will move the PDF to the next screen here. So the first key point on the interbranch transaction is that this is an add-on. In other words, the interbranch transaction module is not available for with regular advanced financials or any of those modules. So whenever you are proposing any solutions to customer that relates to interbranch, please make sure that the add-on has been included in the customer's licensing. Otherwise, the customer might end up would have to pay for additional license cost. So please keep that in mind whenever proposing that option to the customer. Now, before we move on, interbranch transactions must be configured between two branches that are posting to two different ledgers. As I said earlier, system will not allow an imbalanced transaction within a ledger. So if you have transactions that go across ledgers, we have to make sure that interbranch is enabled and configured for the system to create those balancing due from and the due to entries within both the ledgers, so that the ledger at any given time remains balanced for trial balance purposes and what have you. Interbranch transactions can also be configured between the two branches posting to the same ledger, but it is not mandatory. So it is not necessary that interbranch has to be enabled when doing transactions across ledgers. You can also, it is mandatory when you're doing it across ledgers, but you can also configure, like I can create interbranch transaction between the east and the west ledger, which are both part of the computers company. However, it is not mandatory. I can decide if I want or I don't want. So if I do not have the license and I have both those ledgers pointing, both the branches pointing to the same ledger, it is not mandatory for me to have interbranch set up. Okay. However, you do need to remember one thing before I move on to the next topic. Let me quickly share with you a critical setup information regarding the interbranch transactions. For that, I'm going to change over to the company that we were looking at yesterday for the initial setup. Okay, under finance, general ledger, configuration, we have interbranch account mapping screen here. And let's say I pull up the soft branch, and you will see everything below on the section is actually grayed out. If you click on ledgers, you will see that there is only these number of fields that you're seeing on the screen. That is because interbranch is not enabled for this company. So if I want to enable the interbranch, again, going back into configuration, enable disable features, I'm going to click on modify, and interbranch available under the advanced section of under the advanced financial section. I enable this, check this up, click on the enable button. And what I'm going to now see under finance, general ledger, interbranch account mapping screen is a grid that allows me to select from what define my interbranch accounting rules or mapping of accounts, that from this account to this account, if there is an interbranch transaction occurring for a particular destination branch, then I want you to use a particular offset account to do that transaction. So all of that grid gets enabled, and we will see that in more detail when we do the accounting transactions actually. And if you click on the destination branch, so both these tabs become available once the interbranch transactions are enabled for the company. Now, more importantly, there is one more section on the ledgers screen that gets enabled for you, is called the branch accounting column. Now, this column is extremely important for those that do not, for those ledgers which you do not want to have interbranch transactions set up for. So for example, let's look at actual soft for the first time. Here in this particular ledger, there is no consolidation branch. Reason being, we only have one branch for Software Inc. and there are not multiple branches in here, and therefore the consolidation branch remains blank, and so does the branch accounting remains checked and grayed out, and it does not allow you to change anything, which means this particular ledger, any transaction occurring outside of this ledger will require an interbranch transaction. However, look at the Computers Inc. Posting ledger. The minute I define a consolidation branch, the system allows me to check or uncheck this branch accounting section. I leave it unchecked because I do not want any transaction between, I do not want any interbranch transactions created between the branches that post into this ledger, which in other words are East and the West branch. So if I do not want any balancing entries or interbranch between East and West branch, I have to make sure that the branch accounting checkbox remains unchecked on this ledger screen. If I want, I need to check this box, and the system will force me to have interbranch transactions for any branches that are part of the same ledger. Does that, I hope that makes sense to everybody. So that is how the branch accounting checkbox makes it available to everybody for screen. I do have a question. Why do we have Software Inc. in the top? Okay, that wasn't really clear. If somebody can type top menu. Oh, so this Software Inc. on the top menu, this is because that's basically cached. And when the first time when I logged in, I used this particular branch. But next time, if I want to change this, I can change it to whichever branch I want. But this is just a caching thing. At the time, initially, when I first logged into the company, I was logged into the Software Inc. branch, and therefore it remains as a Software Inc. branch. But once I change this, and if I have access to this particular branch moving forward, I can always have that into the Western office or the Eastern office. The other thing is I can also define under the user profile. If I click on the top right corner under user profile, I can always force a default branch on any user when they are logging in. So that way, whenever the user is logging in, it will automatically default to that particular branch that I would like it to be. So those options are also available for you. Also, in case if you have defined branch level security, and if a user is logging in and if it has only access to the Computers Inc. branches, it will only default it to that particular branch and not show up any other branches at the top right corner. And we'll talk about this more on when we are doing the interbranch transaction screen, and I'll explain what each one of these things mean. Okay, with that said, let's switch to the next company. For those who are following me, we are now going to switch over to the company which was when you created a new company, when you were creating a new creating a new instance for yourself for the training program. There was a predefined company that you could select on the company wizard, and it was called F200 INIT. So I'm going to switch over to the INIT company, which basically has a lot of these default setups, so we don't have to go through and create those defaults again at the for creating or going through this training program. All right, so if I click on configuration and enable disable features, you will notice that this already has the interbranch transactions enabled for me. Okay, going on to the interbranch. On the interbranch, we will be doing different scenarios. Firstly, we'll create transactions in 3 different submodules like accounts payable, accounts receivable, and the cash module. In the accounts payable module, we'll create an AP bill with the same within the same company for different branches. We will then make a payment within the same company. Step 1 and step 2, which most likely will not create any interbranch transactions. But then we will create a bill across companies. We will create an AP bill across companies, and then we will make a payment against that bill for across companies as well. So in the AP transactions here on the AP bill, as I said, now one of the things that you want to bear in mind at the time of creating these transactions is that AP, whenever it comes to an AP side, I will call it as a bill, and whenever I relate it to an invoice, it will be related to an AR invoice. So basically in Acumatica, we call AP for bills, which is basically your AP invoice, and AR for invoices, which will be used for our invoices screen. Okay, so let's go ahead and create an AP bill right here on the screen, and it will be the first one on the screen here. So my first thing I need to do is I want to create in the Western office of the computers company, which is represented by the West branch in the system, processes a $300 bill received from Airgas Inc. On 01 October 2014. Now, one of the things I would, while going through these training exercises, I would request that all of us change the date over here to 01/01/2014. So 01/01 01/01/2014. And click OK. And what happens is that the business date is now changed to 01/01/2014. All the transactions that will occur during this for this particular time frame. Is everyone, please raise your hands if you are able to see my screen. I see a message that that the screen is frozen. Can everybody see my screen? Okay, thank you all. Okay, might just have been particular for this minute. Okay. All right. So let's go ahead and change this date because all our examples are set for 2014, which is where we are going to do all our transactions in. So I've set this up. Now, let's go ahead and create a bill. In this case, I'm going to be creating a branch called the West branch. So here I come into finance and I'm going into accounts payable. Okay, on the accounts payable section, the system is automatically logged in here as the Software Inc. branch. Now, what it wants us to do is change this to, because we are going to raise a bill on the Western Office branch, I'm going to change this to a Western Office branch here so that it becomes my originating branch. So what's an originating branch? In other words, basically what happens is what the changes over here means is that I have changed my logged in branch to the Western Office of the Computers Inc. branch, so the West branch. Now any transaction I create over here moving forward will automatically default everything to the Western Office branch. And in other words, it will also default the ledger of the Western Office branch associated to it. Now, this is only helping me default my origin branch, or the the original branch, or the source branch in the system. The source, this default, when based on this branch, the system will default the origin branch over here on the screen over here as West. I still have the option to change it to any branch that I want by overriding it, but by logging into the West branch, the system just defaults this branch for me, and therefore it makes it easier from a data entry perspective to populate the origin branch right on the screen, but I still have the ability to override this. Therefore, the logged in branch is only helping me default the origin branch, or the main branch where I'm entering the transaction, versus which can always be overwritten at this level. So this is pretty much the West branch over here is what is my origin branch, or the branch in which the transaction is being created. Okay, so let's go into the AP bill. Let's create a bill for a company called Airgas. And I am, as soon as you see, based on the default date that I have logged into, the system is automatically posting the defaulting the dates of the transaction that I want the transaction to occur in. Okay, my terms are 30-day. My date here is 01 10 2014. My post period remains 01 2014. I'm booking a bill for air conditioning servicing, and on the document details tab, as soon as I add this, the system also asks me what branch is a. So we have one branch which is called the origin branch, and the other branch which is called the destination branch. So the system, for the system to determine whether this is going to create qualifies for an interbranch transaction, it compares the origin branch over here, which is where the data entry is happening, and with the destination branch, which is what I will be entering on the grid. If those branches are the same, or they're within the same ledger, then the system will allow me to move forward. Otherwise, it will, if it is not part of the same ledger, then it will force me to have, it will validate if there are interbranch transaction settings enabled, and that it can allow me to release that transaction. Okay, so I'm going to select that. In this case, we are going to use the destination branch to be West. My extended cost here is going to be $100, and my expense account over here is going to be $75,800. with repairs and expenses. The sub account remains 0000. And now I'm going to add another one line over here, which is going to be for the East branch. Again, since there is no interbranch configured between West and East, this should still allow me to move forward and not have me create any kinds of transactions. So I'm going to create $200 on the East side, and the account code is 75800. The repairs and expenses remain the same, and I save this bill. Okay, now I can uncheck the hold button, save. It remains in a balance status, and it allows me to release it. When I release the transaction, this particular screen becomes frozen. There is no further changes you can allow, but also at the time of the release, the system creates a financial transaction. So if you click on this batch here, which was originally blank, I can click on this batch on a hyperlink to see the GL transaction the system created. So an accounts payable credit of $300, the West branch for $100, and the East branch for $200. Because there is no interbranch related between East and West branch, the system has not created any interbranch or forced me to create an interbranch transaction. Okay. If you notice here, on the other side of this, on the journal transaction screen that you create, the origin branch, which is the West branch, this is where it's coming from the financial settings tab, and the system is posting that transaction into the actual comp ledger. So at any given time, it is this branch here, under the financial details tab, which decides where this transaction is originally going to be posted into, which ledger is this going to be posted into. I do not have the option to change it to some other ledger, have it West branch and say actual soft. The system will throw up an error message. So it has to be to the ledger that it has, which it is always going to default to, but you have the but it'll always display what particular ledger this transaction is being posted into. Okay, so now let's make a payment within the same company, and we'll see how that transaction goes. So I'm still in the West branch. I'm going to make a payment for $300 for air conditioning services from one of my cash accounts that I have created for the comp. So let's go ahead, make sure I'm on the branch here, which is the correct branch. I'm going to pull up this particular bill that I created, and I'm going to click on Actions and say Pay Bill. So this is one of the ways of paying a bill. I also have an option to create checks and payments and create a payment transactions directly from there. I also have the option to do multiple batch payment processing from here by selecting multiple vendors and multiple bills and making one payment against that. So different ways in which you can create it. This is all F100, but I'm going to go ahead and click on Actions and say Pay Bill. Okay, I created a bill. It automatically defaults the payment amount, and it also defaults the bill on the screen. The originating branch over here remains the West branch, which is where I've logged in from. The application date needs to be changed to 01/20/2014. I'm going to save this, and I will action print check. Generates me a check number. I process this. This is my check that gets printed. And automatically, as soon as I close it, it brings me to an action release section here, and I click on process, and that will release my payment transaction. As soon as I click on the payment transaction here on the hyperlink, it'll take me back to that same payment transaction. The documents to apply screen remains blank, but the application history shows that this check of $300 was applied to this particular bill of $300. Now, as soon as you click on the financial details tab, it'll show me the batch number that was created on the release. So let's quickly take a look at the transaction that was created. The transaction shows a credit of $300 to the West branch of on the checking account, and a debit to the accounts payable for $300 for the same branch. The transactions occurred because the original bill that we created had West branch that was used as the origin. When the system is adjusting against that particular transaction, the system is using the default branch or the originating branch for the accounts payable to be adjusted against the checking account. And since both of them are part of the same West branch, there will be no inter-branch transaction getting created. Okay, now those were the two simple transactions that we just saw. Now let's go ahead and try to create an AP bill across companies. So now we want to create is that computer company is going to process an office furniture repair bill received from Repair Master. So we have $2,400 of utility bill that includes the expenses incurred by all offices of the ABC company and should be paid within 30 days of 01/12/2014. $700 of that bill is incurred by the Eastern office, $800 is by the Western office, and $900 is of the software company. So just to drag and bring the screen up here so you can see what this bill is all about. So here we are now going to book a bill for $2,400 by staying on to the computers company or the Western office branch, and the system will create for the ABC company $700 of which is for the Eastern office, $800 is for the Western office, and $900 is incurred by the software company. So what we should see now is an inter-branch transaction being kicked off by the software company. So let's make sure that we are on the West branch, which is what we are going to be. So I'm going to move this away to another screen, and let's go ahead and create a new transaction or a new bill on the AP side. I'm logged into the Western office, which is what the system wants me to do. I'm going to click on New. I will select Repair Master. And my date is 01/12/2014. Office furniture repair, and click on the financial details. Here we have the West branch, which is what we want. Now I'm going to add the expenses on the documents details tab. The branch is West. Amount is going to be $800, and the account is 75,800, which is correct. Then add another row here and make it East. Amount is $700. Account remains the same. And then we have Soft branch for an amount of $900. Okay, I'm saving this bill. So take a look at how the bill has been created. Now we have a financial, the origin branch is the West branch. The system is now going to compare that West branch with the destination branch over here on the grids. West branch is equals West branch on the origin side, so no inter-branch transaction. East branch, West branch, no inter-branch transaction. Soft branch to West branch qualifies for an inter-branch transaction. So when we release this bill, we should see a GL transaction created or an inter-branch transaction created for the soft branch. So let's go ahead and proceed with releasing the transaction. Okay, so when the transaction gets released, let's click on the Financial Details tab and let's review the transactions the system has created for us as for the $900 related to the soft branch, right? So now what it did here, if you look at the GL transactions, you have the West branch, which is 2,400 on the credit side. We have the West branch for $800, which is their expenses. East branch, $700, which is also their expenses, which is part of that same ledger. However, for the soft branch, this amount of $900 should go to a different ledger, and that ledger is the actual soft ledger for $900. But if it goes to that particular ledger, then this GL entry or the GL transaction becomes imbalanced. Therefore, the system has to add one more entry or the balancing entry onto the West branch for the same $900. So this amount, which is originally getting posted to a different ledger, we are compensating it or by creating a balancing entry in the West branch for the same $900, which basically means that the amount becomes due from the software company. And because this GL transaction created in the soft ledger, I need to have a transaction that needs to balance it out by creating another entry in the soft branch for $900 credit, because that amount for the software company becomes due to the computers company. So everybody, please raise your hand if this makes sense. Otherwise, I'll repeat this. Okay, I do see a few hands, but let's continue going through it, and I think we will get a better understanding of how each one of this. So now, how did the system determine what $900 of this, on which account to post this to when this particular transaction, when an inter-branch transaction occurs? So this definition here happens at the general ledger configuration inter-branch account mapping screen. Over here, what I say here, so let's double click on the West branch, and here I'm saying when West is the originating branch, so which is that originating branch is the West branch over here, and if there is a transaction related to a soft branch in the originating branch, then I will, for account that is 000 to account 99999, I want the system to post that information to a offset account, which is 2000010. So if you look at this, this is where the transaction is coming from, $900 for this account. Now I can have a range set up from account to this account, from multiple for assets I can have a different account, for expenses I can have a different offset account, for liabilities I can have a different account, or revenue I can have a different account. In this example, I'm just having one account for all of it, but you can have multiple different accounts or a whole table set up to say, okay, from this account to this account I want the system to use the same. So now this transaction in the originating branch is going to be created as a balancing entry. But at the same time, for me to be able to balance this transaction in the originating branch, because part of it is belongs to this $900, I click on the transaction in the destination branch, and the system is here is where it picks up saying, okay, in the destination branch, I want you to use the destinations branch as the soft branch from this to account 200011. And therefore, it creates a credit over here in the destination branch for $900. So in the originating branch, where the destination branch is soft, I want the system to use this particular offset account. And in the destination branch, I want the system to use this particular account, because that is the only way I can have a balancing entry or the balancing transaction created, which will make my balances tie up. Okay, now before we move on, time for a quick question here. Let's select a question on the poll. The question here is, and I'm going to launch this here. The question here we have, I'm going to read it out to everybody. The interbranch transaction feature is enabled if interbranch account mapping isn't configured between two branches. Select all correct variants. So the interbranch transaction, if the interbranch transaction feature is enabled, if the interbranch transaction feature is enabled, so basically we have that enabled. If interbranch account mapping isn't configured between two branches, then let's select which users cannot make transactions between the branches that post to different actual ledgers. User can make transactions between branches regardless of the ledgers they post to. Users can make individual transactions for each branch. So let's see what the answers are over here. There are multiple answers here. If there are multiple correct answers, you need to select multiple correct answers. Okay, I'll be closing the poll in another 10 seconds. Okay, 1 second. I'm going to close this poll. Let me see if we will not count this poll. I believe there are only 2 questions somehow being posted over here. So I will, if that be the case, then I will verify that, and we will not count this against any of your scores. Let's try to see we can have another question again on interbranch. And which is the next question I'm going to ask here. To implement automatically balanced interbranch transactions would have, okay, so here, and let me just launch this another question for polling. To give users the ability to make interbranch transactions that do not require balancing entries, you have to do the following. Enable interbranch transaction feature in the system, configure interbranch account mapping. On the ledgers form, select the branch account checkbox for the ledger. On the ledger form, okay, is the third question. I'm sorry, the sequential order got messed up on my screen over here. The question here is to implement automatically balanced interbranch transactions. The answer options are: you have to define interbranch account mapping. You have to define interbranch account mapping only if branches post their transactions to different ledgers. Yes, they have only two answers. And there are no third answer on this one. Okay, I am going to close the poll. And since the third question also belongs to intercompany, let me go ahead, and we have only two over here. Third question. Okay, there's a last question here to give users that I'm going to launch here. To give users the ability to make interbranch transactions that do not require balancing entries, you have to do the following. Enable the interbranch transactions feature in the system. Configure the interbranch account mapping. On the ledger form, select the branch accounting checkbox for the ledger. On the ledger form, clear the branch accounting checkbox for the ledger. So out of the four, there are two correct answers as a hint. To give users the ability to make inter-branch transactions that do not require balancing entries, you have to do the following. Enable the inter-branch transactions feature in the only all right, something seems to have been terribly gone wrong with the question, so I apologize for that. We will make up those questions tomorrow for you all. So if the questions aren't coming up correctly, then we'll have to review them, and we can restate the questions tomorrow, or ask more questions on the topics that we will cover tomorrow. So I apologize for that. Now, so for the questions, the first question that the request came in that they were the interbranch transactions. So I'm going to close the poll now. So let's talk about them. The interbranch transaction feature is enabled if interbranch account mapping isn't configured between the two branches. So the interbranch transaction feature is enabled, but if users cannot make transactions between the branches that post to different uh, actual ledger. So if the interbranch transaction feature is enabled, you have to, the interbranch transaction mapping isn't configured between two branches. So users will not be able to make any transactions that post to different actual ledgers. Basically, that's one of the that is a correct answer, and users can make individual transactions for each branch, and that is also a correct answer. Users can make transactions between the branches regardless of the ledger they post to. That is an incorrect answer, because if they are posting to the same ledger, then they will be able to do the interbranch transactions without any without the mapping being done. Okay. On the next question, give the users the ability to do interbranch transactions that do not require balancing entries. You have to enable the interbranch transaction. That was an easy one. That is correct, that you have to enable the interbranch transactions to enable balancing entries between the two. The second correct answer is on the ledgers form, clear the branch accounting checkbox for the ledger. So when you clear the branch accounting checkbox for the ledger, the system will allow you to not have the balance. It do not require balancing entries between two branches of the same ledger. Configure interbranch accounting. Well, that's not a right answer. on the ledgers form, select the branch accounting and select the branch accounting. You know, when you select the branch accounting checkbox, the system will force you to have the interbranch transactions. And the last one, we said to implement automatically balanced interbranch transactions, you have to always define the interbranch account mapping, which is the right answer. You have to define interbranch account mapping only if the branches post their transactions to different ledgers. That is not actually correct. You can have transactions post to balancing entries created within the same ledger as well. So therefore, you have to define the interbranch transaction account mapping. Okay. All right, so those were kind of the quick answers. Let's go back into creating our accounts payable document. So we did create this, and here we saw how the interbranch transaction entries did get created when we did transactions between the two of them, between the two branches. Now let's try to make a payment. The West branch of the computers company, let's move this here so we can read this together. The West branch of the computers company pays outstanding bill to repair master vendor. The company pays $2,400 of the computers company, and the two outstanding bills of the software company for $1,300 and $980. These bills have been imported during the data migration enter. So we are going to make another payment from the West branch for two of the outstanding bills that related to the software branch. So at this time, we are going to create a payment from the West branch for bills that pertain to the software branch. So make sure let's go make sure that we are on the West branch over here. Let's go back into the payment screen. So accounts payable, checks and payment. We are on the West branch at this time, and our payment date is going to be, we could select repair master. Payment method is check. The date of the bill is going to be 01/31/2014, and I'm going to select documents to pay. I am going to, I can click on load document, and this is all what we have already done in the F100, where it loads all the open bills. So now if you can see, the $2,400 is the bill that we just created right now, and the other two bills, $1,300 and $980, actually belong to the soft branch. So if you click on this branch, and if you click on the financial details tab, you will see the soft branch as your originating branch. So at this time, when we are making a payment of $4,680, part of that belongs to the soft branch. So we should see an interbranch transaction created when we make a payment like this. So we're going to go ahead and actually print the check. Process. And I'm going to click on process. The check has been released. Now when you open up this transaction on the financial details tab, you will notice the balancing entries that got created for $2,280 worth of a software branch transaction, that is 2280, which was created, and a balancing entry was created for that, because that amount, because the West branch paid on behalf of the soft branch, and therefore that amount becomes due from the software branch, and for the soft branch that amount becomes payable to the West branch, and therefore the balancing entries automatically got created for the differential amounts. Okay, so now that we have seen the AP transactions, let's try to create some AR transactions as well and see how the system is going to create or act when the same transactions occur at the time of creating an invoice. Okay, just so you're aware that all of these invoices that we are creating on the financial tab, if you were to create the same thing on the distribution side, and those invoices get released and creates an AR invoice, and if there are multiple branches involved, the system will automatically create those balancing entries for you even from the distribution module. So it doesn't really matter where the system originates these transactions. Okay, so on the AR side, we are going to create a transaction on 01/20/2014. The computers company issues an invoice to YY Studio, which is a customer, to the amount of $3,900 worth of services delivered to the customer by both companies. The Software Inc. has provided services worth $3,000, while the computers company has provided services for $900. So to make an AR invoice transaction, we will be creating one transaction, one invoice for both the branches. So let's make sure that we are on the West branch, which is what we are in. Let's click on the accounts receivable, invoices and memo screen. Okay, on the invoices and memo screen, I'm going to select the customer as YY Studio. On the date here is going to be 01/20/2014, and (001). Now, remember, the most important thing is the originating branch is the financial details tab, the West branch over here. And the destination branch is the branch that I enter on the document details tab. So on the document details tab, I select the West branch, extended price of $900. The sales and consulting is populated appropriately. And then I'm going to change this to a soft branch here and change the amount to $3,000 and save this transaction. So now we have an invoice being raised in the Western office, in the West branch, for $900 of services provided by the West branch and $3,000 worth of services provided by the Soft branch. So I select them all and I am going to release this transaction. And as soon as I release this transaction, I should see a balancing entry being created for to the extent of $3,000. So if you click on the financial details tab, you will see the $3,000 of credit that was now on the software branch. The system has automatically created a debit of that same $3,000 on the soft branch, because this $3,000 is now due from the West branch, because the West branch actually raised an invoice on a customer for a services that was originally delivered by the software branch, and therefore that $3,000, when the West branch gets paid $3,900, the $3,000 of that is actually for the soft branch, for the services that were paid by the soft branch, and therefore the soft branch needs to get, so the amount of $3,000 now becomes receivable from the computers company, and the $3,000 becomes payable to the software company on the West branch's ledger. Okay, so that's the way the system is creating the transaction. On the AP side, we looked at the expenses where there was a debit, and since there was a debit of that expense, the amount was due to on the destination company, whereas now on the invoice side, where revenue is on the credit, the amount is due on the originating company side. So that's basically the difference between the AP and the AR side. So let's go ahead and now receive a payment on the West branch from YY Studio. So let's go ahead on and receive a payment. So I'm going to click on the payment screen. On here, I'm going to select YY Studio. And it's going to be a check for on the comp branch 8010 is the amount. The date is going to be 01/30/2014 and the payment reference 01/30/2014. Why? Just a word of caution, please keep in mind that whenever you are making these payment transactions, make sure that the date and the accounts and all of that are selected appropriately and the reference number is selected appropriately, because we are going to be using this at the time of bank reconciliation. So make sure that these transactions are appropriately appropriately selected with the right amounts. That way you can see the auto matching and all that features in the bank reconciliation module. So on the invoice, now one of the difference between payments on the AR and the AP side is that I can save and release a payment transaction on the AR side without applying any documents to it. I can just select this and I can release it, and the system will allow me to release it without really having any kind of having any kind of payment documents applied to it. The payment will remain open till I apply the documents, but the system allows me to receive money on account without applying a document to it. The same thing cannot be done on the AP side. On the AP side, you have to match a bill against every payment that you're creating. The system will not allow you to just create an on-account payment for any just transaction on the AP side, for reasons best known to you all, because it becomes an audit issue and that somebody can just write a check without any supporting documents on the AP side. On the AR side, because the money is coming in, the leverage is available. Okay, so now I'm going to select load documents, and it's asking me from what date to what date do I want to load the documents. I'm going to select 01/30/2014 and say load. And it loaded two documents. One is for 4109.89 and the other one is for $3,900 that we just created. So I am going to select this and save them. And as you can see that there is a difference or available balance of 11 cents, which I can still leave it. And even if I release this, the system is going to be fine with it. So I'm going to just uncheck, save, and now I'm going to release it. So when I release this transaction on the West branch, you will notice that the system did create a transaction of 4109 because the original 4109 invoice that was raised here, 4109, actually belonged to 4109. 4109 over here actually belonged to the soft branch, and that is where the due from and the due to entry got created. Actually in this one. Yeah, the soft branch. So here is the originating branch here, which is the soft branch. Okay. So moving on to the fund transfer, let's also quickly do a fund transfer between the two accounts and from one bank account to the other bank account, and let's see how the system actually ties it up. So now before we go on, let's see what because we've created all these transactions, let's see the balances in the due from and the due to accounts, so we can define how we want to really have the system to populate that information. So let's go into general ledger, and we will go into the account summary screen. And on the account summary screen, I am going to select the actual comp branch, and for 01/2014, and I will see a balance of 3929.89. So this one is a liability account. So this amount is due from or is payable to the soft branch for the amount that we have for the amount of transactions that we have created. So now let's move on. Let's see this one. And what we want to do is, because this amount is lying in here, we want to make a payment and do a fund transfer out of the West branch and reimburse the software branch to zero out their balances. So if you click on the account details tab here, you will be able to see all the GL transactions that led up to that amount that we have just created. So let's proceed with paying up the company, paying up the transfer from the computers company over to the software company. So we will click on the cash management screen, and we'll do a fund transfer. Okay, on the fund transfer screen, I am again on the West branch, logged into the West branch, and here on the description, I'm going to say intercompany. So I'm clearing up my account here, and I'm going to say 10/2000 comp, and my date here is 01/31/2014. Document reference is 01/31/2014. Transfer amount of 3930, and the destination account is 10/2000 soft branch for the same date with the same reference for 3930. On this example, we are not going to add an expense, but if you are doing like a wire transfer or something, and if there is an expense, you can always add an expense to an existing fund transfer at the same time for a bank charge type or whatever. Okay, I'm going to uncheck this. Okay, so the system creates the GL transaction, and now what it does is, on the West branch was the originating branch, so it did reduce the amount of 3,930, and the receiving branch was this branch, and therefore the system created a balancing entry for that particular account. And now if you go back in and check the balance transactions for the account summary, you will see a minor difference of 11 cents in the due from and the due to account for the soft branch, for the computers branch. So here, that balance of 3930 is now reduced to 11 cents as my fund transfer. Okay, so now that we have created all these different types of transactions, let's take a look at some of the reports, the consolidated reports that we can generate out of Acumatica. On the first one we will start off with is the trial balance report. So if I click on the report section, and we have the trial balance summary report, and when you log in over here, you will see in the reports parameter, it automatically defaults the West branch, the ledger, and the date. Now, one of the things that you want to remember, the asterisk over here is for the ledger and the financial period. So basically, if you're looking at this, you are saying that The ledger is actual comp because we are logged in branch is the actual comp branch, and it is the financial period is 0. Now let's say, for example, if I run this report here, you will notice that the asset total 15217 does not match my liability total of 16117. The reason being, this one is only showing me a transaction for the West branch, and because there are no interbranch transaction, there is always a possibility that there will be imbalance uh, trial balance for specific branches. So if you click on the East branch, also there is a problem here because there is no assets and liabilities, but the year-to-date income of $900 without any assets is showing up over here. So therefore, for individual branches, when I run these reports for the trial balance, it will not match up. But if I remove this from the branch and blank this out and only run it for the ledger, and I click on the run report, then these two balances will appropriately match up on the asset side and the liability side. Okay, so very, very important is that in cases where interbranch transactions are not being done, that at that point in time, we have to make sure that whenever we are running this trial balance, we remove the branch from here, because the branch may end up providing you an imbalanced trial balance. Okay, now moving on to another example of the soft branch that I have already explained. Now let's take a look at some of the ARM reports. On the ARM reports, what is ARM? You would hear this all the time from hearing while working with our support teams or any of the pre-sales team, where they talk about ARM. ARM is nothing but it stands for Analytical Report Manager. The Analytical Report Manager is kind of a very user-friendly tool that accountants would love to use to generate different kinds of reports that they would have to otherwise rely on an Excel sheet or something to generate these reports. So the ARMs are actually allows you to select or create your own row definitions, your own column definitions, so that you can generate your reports in a particular format that will provide you the information that you're really looking for. So let's look at some of the canned reports that we have created for you in this company. So for example, let's look at a profit and loss statement. So I'm going to look at a profit and loss report for Software Inc. So at this point, the system is asking me, this is an ARM report which is getting generated. Let me click on the ledger, which is basically, if I want to run it for the Software Inc., I select this ledger for 01/2014. And it provides me a year-to-date balance and a period-to-date balance from the report that I am really looking at from. But let's take a look at a report which is going to be a little more in-depth, so we can go through and see some of the information for so let's look at a more consolidated report here, which is profit and loss report for Software and Computers Inc. In this case, it's asking me which financial period you want to run it for. I select 01/2014. I click on Run Report, and here the system actually provides me a consolidated report for the total sales of $3,900 that we just did, and services and utility expenses of $2,700, and has the year to date and the period to date. But let's say if I now want to see if I want to break this down by how much computer company made and how much software company made, then all I need to do is while this one's a consolidated report, I just click on this little icon here on the group section, which allows me to actually break this entire consolidated statement on the fly down to every specific branch in the system. So if I click on Software Inc., it only shows me the balance totals um, for the Software Inc. branch. And if I want to see it for the Computers Inc., Consolidated Computers Inc., it shows me the balance for the Computers Software Inc. Eastern Office, we breaks it down by the Eastern Office, and so does the Western Office. So these reports have actually been designed for you all to kind of get an understanding, and they are canned reports for on the F200 INIT company. So if you all go into the company, you will see that these reports have already been created for you that you can export and import to any of the companies or your customers when you are trying to implement this for who would require such reports, or even build off of this report. Typically, majority of the cases, we don't really start any report from scratch. We just basically take an existing report, export it out from any of these companies that we have already created these reports from, change it for the customer's requirements, and then basically generate this report. So let's take a look at an in-depth way. Now that you have seen what these reports are designed to do, how the profit and loss report is being created, let's go ahead and generate the see how the system is actually, how these reports are being actually created. Now, the trial balance, the reports that you see over here, the trial balance summary, trial balance detail, these are off-the-shelf reports that have been created by, that are not using ARM engine, but all the financial statements like balance sheet or profit and loss or cash flow or any of these reports that you see here are all using the ARM engine. Except for the trial balance summary and the detailed reports, all other reports are using the ARM reporting engine. So if basically, in other words, if you were to generate an ARM, if your customer wants a P&L, which they obviously would like to, P&L or a balance sheet, then you would have to build it for them through the balance sheet. Of course, we have predefined reports which kind of work, but they definitely will need some tweaking. So any new company that you create for the first time will always have some basic reports predefined for you that you may have to tweak for the balance sheet and the P&L to work as per the customer's requirements. So with that said, let's go ahead and take a look at some of the profit and loss reports and all of that in the report definitions. Also, if you want to do, there is a complete session on F350 which talks about how to build ARM reports, which is kind of quite in-depth. We will not use it in this section because there's a lot of syntaxes and formulas that you can use, which sort of confuses a lot of people when they are doing it for the first time. So let's look at the profit and loss report over here on the. This is kind of the report definition. What is a report definition? Report definition basically brings about the row definitions, the column definitions, and the unit set definitions for you into and says, okay, whenever a report is generated, I want you to build the report based on this row, based on this column here, and based on this unit set, and generate this report. And then it also has different areas over here which says, okay, what do you want the start period to be? And over here, I check this box here which says select request. So that means whenever I am generating this report here, profit and loss report over here, the system, first thing it'll ask me is what period do you want to run it for? And it is coming from this particular report parameter. So that's how the system is actually generating these particular reports. And when I define these report definitions, I can tell it which particular location in the system, in the sitemap do I want this to be located. So if you can look at this sitemap entry, I'm telling the system that I want this report to be listed under financial statements, which is the financial statement over here. So if I click on this, it'll show me the entire sitemap or the menu options of Acumatica, wherein I can say, okay, general ledger under the report section, which is this. I want financial report. This is my financial report folder. I want all the reports to be listed under that. And I select this. And then I can also give it a different title. I typically recommend that you have your title and the row description, report definitions identical to each other, so it becomes easier when you are searching for those reports. Okay, so now let's look at how the row sets are defined. Okay, if you click on this row set, you can also go into the row set screen over here, but here we have a pencil over here. We can click on this pencil and it'll open up the row sets. So if you notice on the row set, here are different ways in which these are all user-defined fields and columns that you would have to, that you select over here and tell the system how do you want this, want it to react when the report gets generated. So for the first line, each one of these have a unique code. Every row in the system has a unique code. This is extremely important that you have. Always recommended that we always have numeric codes, because that way, if you at any given point in time, if you are inserting more rows or something like that, then you will be able to do a renumbering or what have you over here. And always, whenever setting up these different row codes, keep enough numbers or of row codes in between each of them, so that you have enough space to add or insert more information that you would anywhere at any given time you would like to do at some time. So for example, if you look at this one, we have sales detail as 0100, then 0101, and then we have a total sales over here. But after that, I have 0120 for returns and allowances. So at any given time, I have the option to insert from 0100 through 0120 as many rows I want for sales. So it kind of gives it a lot of flexibility to insert rows if I at any given time want it. So let's look at the sales details here. On the sales details, I'm saying this type of line is a GL line. A GL line means that the system is going to look for information to pull from the database. Other than that GL line, we have a caption line. A caption line is nothing but a header line, it's like it provides a caption, it provides a description to a particular screen. So for example, if you look at 0099, the caption line has a blank description. So basically all it means is that it is leaving a line after the column headers, so that it kind of provides a space in between with a blank line. So that's what a caption line really does. And then you have a line. So when you are adding, so when you're doing your subtotals and order totals, when you want to insert a line in between the details and before the subtotals, you use this line called the total line, the line. The total line is primarily used for doing calculated fields. So at certain areas, if you will see that after doing all the sales calculation, you have a total sales which is depicted as a total line, and here you're saying use the total of at 0100 column. So it is a calculation field that it is pulling up the information. So same way, if you would notice over here on the gross profit line 0280, I'm telling the system, go get me the total of 0100 plus 0120, which is returns and allowance, which will come up as a negative line, plus 0175, which is going to be total other revenue, that is basically anything other than the sales and other revenue totals, and then minus 0250, which is nothing but the total of cost of goods sold. So basically it gives me a formula that I've defined of sales minus returns minus plus other revenue minus cost of goods sold is equal to my gross profit. So that is how a total line gets created the for the gross profit over here. So that kind of explains what each one of these means. The header and the sort section I will come to in just a little while, but let's quickly review the GL side, which is kind of more important here. So as soon as I select GL, the system relies on this particular column, which is called the data source column. Okay, what is a data source column? So on the data source column, I am telling the system, how do you want me to populate the numbers over here? So I'm telling the system, okay, get me all the accounts that belong to the account class sales. Where does this get where does it get this account class from? So if you come into general ledger chart of accounts, each account has an account class associated to it. So when you click on the last tab, you will see all of them, all these accounts being added. So at this time, we have only one account with the account class sales tab. But at any given time, if I want to add more accounts to this particular account class, I don't have to necessarily go back in and change my report definitions in the ARM. The system will automatically take it because it all is part of the account class sales. Now, at the same time, I also want to know the details of what exactly comprises of this sales account class. So on the bottom here, I have an option to say expand, and it's asking me, what do you want to expand it by? So I can select either nothing. So when I say nothing, then it'll just give me one line of sales. If I say expanded, then it'll give me expanded by every account that is part of that particular sales group that add up to that number. And or I can also expand it by sub if I want to expand that particular account group by a sub account as well. And then it'll ask me, how do you want the row description to be? So do you want it to be only code? You want only description? You want code description? Or you want description and code? So different options you have for the row definitions that you can in the screen. So that is basically how this account code is. So this is how the account book close. Now ledger. Now the most important aspect of this is that you need to pick and choose where you want to select your sources from. So for example, the system doesn't need to be defined. Ledger doesn't have to be defined at every row level. You can define the ledger at the column level. So if you were to generate a report for a P&L for computers and the software company, then I would be basically setting it up at the column set level. So the system will automatically intercept it at the column level and show me the balances by each ledger on each one of those two columns that I would have on my P&L. Now, not just account class, I can also do a range from start account to end account. So this is a simple range from start account to end account. I can say from account code 01000 to account code 050000, and that is basically going to give me a range of accounts, a continuous range of accounts. But there are times where I can also want to have a non-continuous range of accounts, in which case what I can do is I can say I want 0100000, and I can say a colon over here, and then I can say 010400. So I'm going to say 200 colon 104000. So that way this becomes an account range. Let's say I just don't want this to be an account range, but I also want another account to be included, and that would be say 107000. And the system, what it will do is it will take the range of accounts from here to this range plus 107,000 in the system for me to be able to combine a non-continuous range of accounts for me. I can also have, this is, instead of doing it this way, I can also have just commas over here, and the system will basically say this account plus this account plus this account is what it's going to give me in the column set. So different ways in which you can set up your, and once you have these ranges set up, then the end account really field becomes irrelevant. You don't have to define this. The end account you have to use only when you are doing a continuous account range, start from to in the system. Now, so that way you can basically build your non-continuous range. The same option you can also use in the sub account. You can basically say, when you do an F3, it'll show you all the different types of so on the ranges over here, so I can select, okay, it should be non-specific, but if I want question mark, question mark, question mark, question mark, and say question mark over here, then basically what this means is that it wants me to pull up all the different sources of revenue, which is nothing but CO, CU, SU, and TR, and populate that at the same time. However, I do not want it by sales region because that will be a lot of 50 sales region, in which case I can say, okay, in that case, I just want this to be something like from non-specific. So I can select this whole thing, and I can say over here, the ZZ, and that will say it'll include all of my sub account ranges from that relate to from the revenue source from 00 to ZZ, which is the last option of the third segment of the sub account. So all of these options can be used in different ways in which I can build these reports on, and there is a lot, the entire course on F350 if you would like to give it an attempt, but there is a lot of information available and different ways in which you can do that. Then once you have that, then you select, okay, how do you want the system to act, when, what kind of style do you want? So on the format allows you can along this format, it basically goes hand in hand with the value. So it's basically, if you want it to be in a decimal place, or how do you want the system to be ranged? Do you want it to be rounded up to the nearest values, or what? This is where you would define your formats, and we will talk about that format in the column set. On the style section, you click here and you can say, okay, what color do you want, what background color you want, what font you want, what font size you want. Do you want it in bold, italics, or however you want it to be? So you can also define different sets of, and at the same time here on the printing control, you can select different ways. So a line break basically means that after this is completed, move to the next line. A hidden row is basically telling me that I am just using it for my internal calculations, because there will be 5 or 6 rows that I would add, which I do not want necessarily to have it displayed on my final end. I can mark that as hidden fields, hidden rows, and just have the net effect displayed on the screen. The merge next, we will talk about that in more detail on the column side, and it's also covered in F350. I urge you guys to do look at that. The start and the end box is basically used for when you are doing a collection of columns that you want to have them all together, so that they are linked to each other. So that, let's say for example, if you want to build a box around a grand total, you can actually define this and say, okay, no matter where, after how many ever rows, I want this to be my first row where the box starts or the line starts, and go down up to this particular box to create a unique box for me. So these are kind of the formatting ways in which you can do that. You can also have page breaks. You have height, which is basically height is how big do you want how big do you want the row to be, and indent is basically under sales. Let's say sales becomes on the subtotals become really indented towards your right, or kept towards your left, or however you want it to be displayed on your reports. So that's typically how each one of these, and as you can see, there is a whole bunch of report sections that have been created over here. On the sort side, the line over here, the sorting option allows me to sort, saying, let's say for sales, if I have 5 lines on the sales, I want the system to sort the values in the descending order based for that particular column. So let's say if I have sales consulting, sales training, sales support, three lines of sales, of which sales support revenue is the highest, and then I want the sales support revenue to be listed dynamically on top. Then comes the second sales line, and then the third line. So that way I can have a descending sequence to a particular set of segments within the sales group. And so I can do the same thing for expenses and for other revenues. So each of these sorting groups allow me to have different criterias in which I can sort them. Same thing on the, let's take a look at the column set. So we've seen how we define the row set. On the column set is a little different over here. On the column set, we say, okay, I want the header sections, the column set defined into two sections. One is the header section, which basically gives you the headers, like the details or the totals of each one of those groups, and it basically just says, okay, here's the year-to-date percentage, PTD, or the total reports header information that you would like to have on the top section. The lower section is more like a calculated section, wherein I intercept the row values. So for example, on the row, I said, just get me the total of all the sales numbers. And then the system brings in at the row level, all the sales total. But then at the column level, I say, okay, if you have on this particular column, I want you to intercept only the ending balance for the period 01/2014. And the system will automatically populate the ending balance for 01/2014 on the as the ending balance. I can also say I want this to be group only done by a ledger account, and I can have the system show up on the ledger itself and have you all see the ledger screens over here on so that you can intercept of all of this. So just a quick reminder, a lot of this is not there on the PDF. It is there on the F350 PDF documents, but it is important that I explain you all some examples of what this report designers, what these different components are, so at least you get a basic idea of what each of these reports mean. If I just show you these reports, you'll probably it looks all nice and clean, but really has no understanding of what really each one of them means. So I'm just taking that extra time to make sure that you are all aware of what these reports, what these different report components are taken off. I don't think this is going to be part of any tests because it is important to, only thing that you're going to see over here is going to be what is there in the PDFs. But it just gives you an idea of what each of these sections are designed to do. Okay, so same thing that once you are intercepting on the unit set on the other side. So you have the row set, you have the column set. On the unit side, this is where basically we are defining the consolidation of the computers company and the software company. So on the east branch, so under the consolidation, I'm telling the system for the east node, I want you to use the data source for actual comp and east. On the west, I am selecting, here is my data source for the west branch. So I'm basically creating a whole structure over here so that when I run this report, the system allows me at this point in time, it just showed me a total of what the year-to-date balance was for each one of these accounts. But when I click on this because of the unit set, it is actually now grouping it and breaking it down by only what is defined at the unit set. So over here, when I click on the Eastern office, it is only saying, okay, the Eastern office, it is filtering the data further for the ledger called actual comp and the data source called East. So here, see, if you look at the ledger and the starting branch is East. So it is further uh, breaking it down so that you can have, or you can see the entire information right on this particular screen for you to be able to generate each of these reports. So really, really important and really very powerful tool. A lot of different options that you can use to generate different kinds of reports across the board. So so I urge you all to to try these out and try some of these scanned reports that are available and work through it. So just give you an idea of what each one of these reports are designed to do. Okay, and same thing with the balance sheet report here on the consolidated balance sheet. If I run the report for a consolidated balance sheet, it basically ultimately providing these guys, the ABC company, the ability to see a consolidated balance sheet using the ARM report for what is Computers Inc., what is Software Inc. So if you can see here for ABC company, all it requires is just this balance sheet. And because there are no transactions, because it's just a holding company, it really doesn't require to be created as a branch. It is just a roll-up group that I am using over here to provide you what the information is. All right, I know I've spent a lot of time on this, but I thought this would be important for you all to be able to just get a better understanding of what each of these reporting tools. So somebody who has a lot of knowledge on FRX or some of the other Microsoft tools will not have any problems with this, but those who do not, then you definitely want to be able to run this. Yes, absolutely. You absolutely can. You should be adjusting these scanned reports because these reports are available to you. What I typically do is I just create them as separate reports. It's very easy to just create them as a new row set. Just click on the row set and you just say, okay, copy the row set, and I just give it a new name, and boom, I have a new row set, so I don't touch the old one. I can also take every report in the screen allows me to simply create a file. Here I can just say export to XML, and I can export it. It'll create a file, download it, go over to any new company or new instance. I can simply import this using that file, and I have the canned report available for the customer. And then, yes, I make all my adjustments to fit it to the customer's requirements. So a lot of these different options that you can do with that. All right. We have about 12 minutes, and I think we can complete the income and expense classification, which is a very simple thing that we want to talk about. So if you are following me on my PDF, I am on page 56. And basically what I want to show you is how different ways in which we can configure or create transactions in GL transactions by allocating it to different sub-accounts. And first we'll do a manual process, and then we'll do an automated process, and how each of these transactions can be created. So on page 58, I'm looking at lesson 12, where I'm going to create a GL. So I'm going to come into General Ledger on the Journal Transaction screen, and I'm on the West branch for 01/2014. I'm going to create a transaction date of 01/31/2014, and I will create salary payment to departments for 01/2014. So on this one, I select the West row, I select the account as 77000, and over here I'm going to select, because my expense heads are the first segment, because those sub account segments I've created, I can always click on F3 and see what the possible values are on each of these reports. So the F3 is where any segmented field that you have, if you click on F3, it will provide you a search for the possible values. So ADM is first, and the second row, I can still do F3. I'm going to select 0, 0, and I can still do F3, and shows me all the different possible values. Now, I select the amount over here as a debit amount of 4,000. Then add a new line for West branch, and this is going to be 77,000. And this one's going to be for the consulting group, so CON 0000, $2,000. For the East branch, also I'm booking the expenses, so 77,000. For the consulting branch also as well, I am doing a debit amount of $1,000. And then on the, since West branch is paying for it, I'm going to just select N2000 checking account for $7,000. And I save this, uncheck the hold, and I release this. And now, if I come into the report over here, which says trial balance detailed report, and if I run it for just the West branch, you will see that under 77,000, this report has been broken down by individual sub-account combinations. So there are two types of report. Trial balance summary is only for natural accounts. Trial balance detail is for broken down by additional sub-accounts as well. This is an existing report and it's not using ARM. So if I were to see the totals, I can also run this report by removing the West branch over here, and now it will include the East branch as well. So over here, if you see, it is showing me the salary expenses for the entry that I just created for $7,000 over here. So that's a manual process of adding a transaction, and we saw that how it reflects on the trial balance. Now, how do we make it easier so that when I create an accounts receivable invoices, which are going to be large in numbers, that I do not want the system user to be selecting those all the time. So how do I come up with a way that I can automatically have the system combine it from different areas? So basically what happens is in the system allows me to combine the sub accounts from different locations. So for example, in this case, if you go into accounts receivable preferences, the system shares combined sales sub account from. So essentially what it's telling me to do is that if I do an F3 over here, it tells me that LLL stands for customer, CCC stands for branch, E stands for employee, I stands for non-stock item, and S stands for salesperson. So essentially what the system's telling me is, where do you want me to look for when creating the sub-account combination? Where, how, which particular entity in the system do I? So each customer can have different ways in which they would like their accounting to be set up. So they can select which one they want to select. Like for example, for branch, let's say for the first segment is for branch, and then they want to just use it from that specific branch, from branch. With regards to this example, what we are going to do is we will put the first level to come in from the customer itself. So basically, when I am saying, I'm going to say, okay, let it come from the customer's location, the first segment. But the second segment is going to come in from my inventory item, my non-stock inventory item. The reason is because I'm going to have, whenever I'm generating an invoice, it will talk about whether it is for support, whether it is for consulting, whether it is for training, or what have you. Each of these are going to be non-stock items. So whenever a non-stock item is pulled, I want my revenue source to be pulled from the item, non-stock item that I select on that particular customer's account. Therefore, I am going to tell the system that whatever I use a particular non-stock item, I want the second to come in from there. And then the third one, I want the system to pull it up because I know that the third one is the sales region. The best place to get this information from is going to be from the customer's profile. And therefore, I'm going to select this from LLL, which is L, which is basically the customer's location. I think I should have changed this to I as well, because the first one is really not the customer. I can select this from non-stock inventory item as well. In this example, I'm just using I and LL for the last. Now, can I say I for the first segment? No, you cannot. You can only do I and then LL or II. You cannot in between select that, take the first value from this place, second value from this place. You can do it only by segment. So now I have this set up. Now when I just set this up, I have to make sure that when I import my non-stock items, that I populate these sub-accounts appropriately. Otherwise the system, every time you bring in that item, is not going to have a sub-account because it's not going to find it, and it'll give an error message and users will have to manually select it. So at the time of creating these strategies, it is important to make the necessary changes. Now these values are only going to get defaulted. That means the system is not going to actually, always have the option to override it at the time of creating it. So now that this has been created, let's go into the non-stock item, which is called support. And I go into the GL accounts, and here I'm going to update the sales sub account over here to say 00 SU00. Now remember, only the first and the second segment are really going to get pulled up from. So 00, the third segment, is really irrelevant over here, but I do need to put in a full set of sub accounts, because without 00 or the third segment, the system will error out. But it will not be used when I create this particular, when I create an invoice using this item. The next item I'm going to use is consulting, and for consulting, I'm going to say 000 CO00. Okay, so I'm going to define that, and now I'm going to go into the customer's location, customer's profile, and I'm going to pull up the customer called YY Studio. And on the YY Studio, under the GL accounts, I'm going to go in and say my sub over here on the sales side is going to be 000, and this is going to be California. The reason is that this customer belongs to San Francisco, California, and therefore I have defined it. So if you are using the same strategy when doing the imports for your customers, you would also have this created in such a way that it comes up in the appropriate sub account. So now let's change our branch over here to the soft branch, and we will create an invoice for this customer called YY Studio. So I select the invoice, for YY Studio, and my date is going to be 01/20/2014, post period. And now in the document details tab, I'm going to add an inventory item called support and an extended price of 150. And then as soon as I do that, you see how the system actually combined 00 and SU from the non-stock item and CA from the customer's profile. So it automatically populated it from two different locations and populated the 3 different segments. I'm going to add consulting here, and it's going to be for 250. And see that automatically the sub account has been populated by CO. And now I'm going to bring in the third one, which is going to be for nothing, just not defined, just miscellaneous charges for $50. In which case, because there is nothing defined in the non-stock or the non-stock item, the system in this case will just take the sub account defined from the customer's profile. Therefore, if there is nothing, no non-stock item used over here, system will use it from the sales sub account defined at the customer's profile. So very important to know about this. Save this, and now when I undo this and release, the system would have automatically posted a report. If I go into trial balance, detail report for the soft branch, it'll show me a sales over here for 3 different sub accounts that I have added. So like the same way as we do it for the sales side on the invoices, on the AR side we use the sales or the customer. On the expenses or the vendor side we use the expense sub account. That is the only difference. So on the AR we use the customer account. So if you go into accounts receivable AR, you will see the sales sub is over here, and if you come into accounts payable and AP preferences, it'll show you the combined sub from the expense account. Okay, I think we've just come to the end of this session right now. I know we are kind of running behind in terms of our the digression I have to take for in terms of explaining the ARM report. So we will try to catch up again tomorrow, and then we will dive into GL, and I'll try to cover up some time about the general ledger and the other modules that we may have to go back on and rush through. The general ledger and all of that is pretty much simpler topics, because a lot of that is more hands-on exercises and less of explaining to do. So I am assuming that those things would really go a lot faster. So I thank you all for being here today and listening in for the session. The session recording is now being stopped.